I know. Holiday's over, almost over, right? Hope you guys had a fantastic holiday weekend, but it's time to get back to work tonight, Monday evening, getting ready for Tuesday's trading session. Got a lot of great trades setting up for Tuesday. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money. Tomorrow, as always, though, before we jump in and get this party going tonight, make sure you subscribe. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in here tonight. If you enjoyed the video, hit that like button for me. I appreciate you guys supporting this YouTube channel. But enough of the intro, though, right? Let's get ready for Tuesday's trading session. Where's the easy money? Where are the best trades setting up here for Tuesday? Well, you'll notice right away here a bunch of ranges on these charts, kind of spilling over from the end of last week at a range on the Nasdaq, range on the S&P, and a big old range on the oil futures. Now, ranges are pretty easy, right? We're buying low, we're selling high, we're trading rotation, trading breakouts, plenty of reliable, profitable setups we're going to track here for tomorrow. And again, I'm going to go over all my favorite trades as we go through the entire video here tonight. Before we jump in, though, and get into each individual setup on each individual market, let's all make sure we're on the same page here for tomorrow. There is some news you do need to be aware of for tomorrow. There are three main things you want to be aware of on the schedule for tomorrow. Well, a couple on the schedule, some that aren't on the schedule just yet. One, of course, is that home sales number at 10 o'clock Eastern time. We have seen mortgage rates here in the U.S. really climb over the last few weeks. We'll definitely be watching closely to see how the market reacts to the existing home sales number. I have to think that will be a big potential market catalyst for us tomorrow morning in our trade room. Keep that 10 o'clock number on your radar. And then even though Fed speak from Bark at 11 o'clock and 3:30 are not going to impact the morning session, which is usually where the best trades are going to be each day, we do want to be keeping our ears open for Fed speak throughout the entire week here this week. We'll have Jerome Powell, the head of the Fed. He'll be testifying on Capitol Hill on Wednesday morning. But the kind of the overarching situation this week is we're coming out of the FOMC announcement last week. Now we'll start to hear from a lot of these Fed speakers. There'll be stuff that's scheduled for tomorrow and the rest of the week. You see a lot of Fed speakers scheduled the rest of this week, but be aware, though, you're going to have headlines that will come in almost out of nowhere. And so tomorrow and the rest this week here, we will definitely be keeping our eyes on the headlines. I'll have my real-time news feed running in the trade room tomorrow because I would expect you're going to hear some commentary out of the Fed here this week, especially tomorrow ahead of Jerome Powell's testimony on Wednesday as they try to explain their strategy here for, of course, following up a record-breaking rate hike, that 75 basis point rate hike that we heard from the Fed last week. One last thing you want to keep on your radar this week. It's not on the schedule for tomorrow. We just found out, though, that the White House here in the U.S. is considering a kind of a federal holiday on their gas tax. Now, President Biden said this afternoon that by the end of the week, they would have some sort of decision made on some, vacation or some pause on the federal gas tax. And of course, this is to try to lower the burden here on pretty much everybody who's suffering through these very high gas prices affecting all different aspects of the world here right now. Now, again, all we know right now is he said by the end of the week they'd have some sort of decision on this. I would imagine, though, at any point, if we hear any definitive updates or really even rumors at this point, I would imagine that will definitely be a big catalyst for crude oil. So that is definitely a known unknown here for tomorrow. So be aware of that as we talk about the rest of these charts here tonight. We definitely know we have a catalyst at 10 o'clock Eastern time tomorrow. I can almost guarantee we're going to see some headlines more than just 11 o'clock and 3:30 from the Fed speakers tomorrow. That is a known unknown as far as what time those will be happening, and so we'll keep our eyes open on that. And again, we're definitely going to be listening in this week for more updates out of the White House, out of President Biden's decision to potentially give us all a bit of a much-needed break here on the here in California, $7 a gallon gas in the cheaper spots here right now. So we definitely anticipate that will be on our radar or possibly affecting us as we go into the week here, the rest of this holiday shortened week. So keep those items on your radar for tomorrow. Again, and some we don't exactly know when. We'll be watching that the rest of this week. Now, let's get down to business here this evening. Get the NASDAQ ready, S&P is ready, crude oil is ready. Glad to see you are ready right along with it. Now, with us. Now, whether you trade one of these markets or you trade all of these markets, make sure you tune in and stick with me the entire video here tonight. You'll learn something new throughout the entire video. I'll provide different trade variations, different setup ideas as we get deeper into this video. And remember, I do try to save the best stuff for the end, so don't miss the ending of this video lesson here tonight. All right, let's jump into the NASDAQ first here. Get the NASDAQ going. One of my favorite E-mini markets right now is the NQ, and of course, its ETF counterpart, the QQQs. A lot of our students right now trade the QQQs or the micro NASDAQs in our trade room. What are the three most important components? Well, we are bullish right now on the NASDAQ after that big run down last week. The bears have been held at bay for now. You could definitely see we're making higher highs, higher lows. The bears having a hard time holding below the moving average right now. This is a bullish short-term momentum market right now. There are three kind of big clues that kind of go along with this kind of bullish tone in the market. First one is a trading range, and we have two of them on the chart right now. What you need to kind of understand about a trading range is that ranges love to rotate. We have two ranges in the chart right now. One, of course, around 11,250. Another one up here around that 350, 365, 370 area. What you want to kind of understand is the market will go up into a trading range, and again, what it will do is it'll rotate. As it moves below that trading range, it'll then try to rotate and kind of spit higher here right now. Now you'll notice what's happening. The amount we go below that trading range is now right about the amount we go above that range. And so we have to think about this as being definitely bullish, right? It's got a bullish kind of tone to it as it rotates off the low of that trading range. But we are definitely sitting at a kind of a major turning point right now for the bulls. The bears are trying to defend. The buyers ultimately are trying to break out of that pendulum swing level, as we call it in our trade room. Same thing happening right here. Bullish into a trading range. The market moves below the range, and now we're rotating up through the high of that range. And again, a lot of bullish momentum as we rotate from underneath the range. We call that rotation off the low. And again, the amount we go below that trading range is the amount we go above that range. So you can see we're right there, right? So it's a very bullish clue. But again, we're at the kind of edge of that rotation right now. Will the buyers be able to break out as we go higher? Another clue on this chart is this hidden, I call them hidden bull channels. If you mark up a trend line off these highs right now, bring it down off these lows, you're going to see a great spot. One of my favorite areas for entries in a bull market is right below a prior swing, right around the edges of a channel. Again, we kind of call these hidden channels. And so you would imagine, right, buyers would love to be buying off the low of that kind of hidden channel. You can also see I've got trend lines drawn off that low, off this low as well. So you have to think this would be a very attractive area for buyers, maybe not the best place to be selling short, right, at this point here tomorrow. And then, of course, last but not least, this kind of a bigger one here is last week's gap. Now, this really isn't much of a big deal right now, but as we get, if the buyers get what they want and break this sucker up into this range above us, you'll notice if you go back in time here right now, that's pretty much what this is, right? We're basically, if you kind of zoom out a little bit, we basically have one big range right there. The market, of course, runs up, rotates down, and now you can kind of see how the story plays out right now. That same rotation now could easily kind of slingshot this market. And remember, we got that big gap up there right from that Memorial Day weekend that still has not been filled yet. Now, obviously, that's a pretty big glass of water, right, to take down right now. And this could easily be setting up for its own hidden channel, right, as we go lower. So we're not quite there just yet, to call this reversal all the way back to that gap fill. But that's definitely something that you've got to be thinking here for the buyers. Will definitely be a very big objective for the buyers later on this week. Ideally, kind of the medium term is that 753 area. And then, of course, up around that 11,879 area is kind of where these buyers would love, I'm sure, to get at some point here this week. How about the bears right now? Boy, the bears are really at a very big turning point. And this is going to be a theme throughout the entire video here tonight. The bears are sitting right at, especially on oil right now, oil defending a big level, S&P defending a big level, Nasdaq obviously defending a big level. This is a big deal, right? Because the bears right now, first of all, they want to defend this area. But I'll tell you though, with all of that momentum turning off of this low, it's I'll tell you, not a very easy place to be kind of stepping in front of that freight train right now. Can the sellers hold this? Absolutely they can, but it doesn't look like a very easy place to get short with all that momentum rotating off of this low. But you have to think though, this is almost like where the floodgates may crack open here for that run back higher here. Bears would love to sell this thing back down to retest the low. They would love to retest those lows here, maybe even take out that 11,000 round number and then start making some damage on the way down to that 657 half level. Maybe not this week, maybe later on in the month of June as we go into that 4th of July holiday weekend. So that's what's on our radar here on the NASDAQ. You can see there's quite a bit of different pieces to this puzzle. So how do we make some money with all this information here right now? Well, first of all, we have to kind of think of the long side here because of all of that momentum that we have here right now. I'm going to get rid of this here just for right now because it's not going to be a huge game. It's not going to be a game changer. I want to talk about really, first of all, some breakouts going higher because that's definitely something on my radar for tomorrow, and some moves going back lower here. So talking first about breakouts as we go higher here. The most important thing is, again, we have to really crack, but really through this area here. And guys, keep in mind, everything I'm talking about right now in the NASDAQ can also really be applied to the S&P as well. They're very, very similar markets here as we go across. Here's a couple different breakout patterns I'll be looking for if we do end up going higher here. First one is that 1, 2, 3 breakout. Now remember, it's a range right here. So that range is a magnet. So we can't exactly start buying here just yet. But if I can get this thing to make a new high, hold a pullback off the moving average now, and jump off that moving average, we call these 1, 2, 3 breakout patterns in our trade room and our video class. Very easy. New higher high, pull back to that moving average, get a jump off that moving average. And remember, we already know this is kind of that almost that last line of defense for those bears here. So this may really pop and it may really run higher here pretty quickly. So we'll talk about some real strong breakouts here coming up next. At that point now, I don't want to buy high, right? I want to buy low. So I'm going to go out, I'm going to find a new channel. I'm going to mark off that high. I'm going to mark off this low. And then what I'll do is I'll drill down and look for an entry off the low of this channel. Now, my favorite entries off these kind of new hidden channels, right? Remember, you draw them off the high, bring them down to that low. My favorite entry is right below a prior swing. We call them traps in our trade room. Now, you won't always have that prior swing there. Sometimes we'll grab a failure setup or a pullback setup off the low of that channel. Now, guys, I know most of you all have already taken our free trading classes on the website. You've learned how to find traps and pullbacks and failure combinations. I continue to be so impressed with you guys making money using just a free course on our website. So keep the feedback coming. But listen, if you're here for the first time right now, if you haven't learned the actual entry setups, I'm not going to cover those in too much detail here tonight. What I'll do is I'll put a link for you here in the upper right-hand corner. Grab that link. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or if you're trying to transition between working full-time and trading full-time, the roadmap that I teach in that free trading course will get you right on the right track, so you'll be ready for the next time. For example, I say a 1, 2, 3 breakout, find that new channel, and what do we always say in the trade room? The first test is the best test, right? I want that long off of that low. Now, one thing to keep in mind here on this is oftentimes the size of that breakout leg is equal to that third leg. So keep that kind of on your radar. We know where the market really wants to go this week, right? Back to fill that gap. But again, that's definitely not, there's no guarantee we're going all the way in one straight line, right? So we want to go one leg up and use that first leg to kind of get that symmetry target, really refine that final target as we go higher there. Keep that on your radar for tomorrow. I would also think too, as we go higher, a pop and grind breakout will be another one to keep on your radar as well. We pop up. Now, instead of pulling back and jumping like that, now what happens is we pop and we grind. These are one of my favorite types of channels because they make the entry really, really easy. The key on this one is it'll pop and begin to separate off that moving average. When that happens, simply draw that trend line off that high, bring it down to that big low, right? Find that, what I call hidden channels. And then remember, look left. Go out and find some prior swings. The goal is, my favorite setups, get right below a prior swing. And what happens is, it'll also get you in below the moving average. And what happens is when you see for example, a strong move for the bulls and we get back below the moving average, you can trap in the bears using what I call a failure setup. It's a very easy setup and we'll look for those right there too. So as we pull back to that channel, get my trap, get my failure, and again, think about the bears coming in trying to sell back in. We can now hit it right into those stop losses as we go. Again, pop up, grind higher, right? Pop up, grind higher. That's definitely something I'm watching for as we go here, and then buying that low of that channel. Again, first leg, second leg, or first leg, third leg, is a really easy target as we go higher here. And again, all this stuff will also apply to the S&P as well. One more breakout for both of the E-minis is one of the simplest breakout patterns and one of the easiest. It's a 2-try breakout. Very simple. Strong move up. Real strong, right? This is definitely possible because, again, you've got that kind of wide open space up above us here right now. Strong pop up, shallow pullback, higher high in price. Anytime we see a strong move, shallow pullback, and higher high, we know the smart money, the wise traders, the experienced traders, they're going to jump all over that little trap off of that low. Remember, though, a lower high does not work, right? It's got to be a higher high in price. Strong move, shallow pullback, higher high. What do we always say? Traps, baby. Traps, baby. One of my favorite breakout trades. And again, applies to pretty much every time frame. You'll see these on the slow time frames, fast time frames. They're very, very reliable. So, get some great shots for breakouts going higher. Like I mentioned before, I'm not a huge fan of getting short here right now. I do understand we're bearish, but again, you get a lot of momentum as I tried to illustrate here before. So be careful trying to sell this top here right now. Now, here's the big question. Here's the $1,000 question. What if we go lower here right now? How do I buy it going back up? That's one of the trickier parts here on the Nasdaq and on the S&P. Why? Why is that so difficult? Well, first of all, we know we have that trend line, so we know the bears don't have an easy way to get there right now. And again, a lot of bullishness coming on here right now. The problem is, though, is that this trading range, remember, this range, we haven't exactly broken free of that range yet. So as we go lower, what's the problem, right? As we go lower here, the problem is now what's going to happen? This market now is going to want to rotate all the way back down and ultimately take out these lows down here. If the bears have it their way, they'll rotate off this high and take out these lows and possibly bounce right back up again, right? And we'll talk about that as we go deeper into this video here right now. Again, I'm not a huge fan of selling off the high, right? For reasons I explained it before, but I do like the long off the low. There's a lot of reasons to like it. Again, we had that channel on here we found earlier. I like that trend line. I like that trend line as well. So as we pull back, are we bearish yet? Not really, right? We're still a bull environment until the bears can take control of this. But we do have to expect those bears are probably going to put up a pretty good fight. So what do we do in that situation? We have to use those sellers basically use their stop losses as fuel for that move going higher. It happened right back here. If you look at what happened on this one, we had that bull move up, that deep pullback, and see how the bears tried once, tried twice, and we snap back up. That's the exact same setup we're looking for over here. Remember, as the market rotates off the high of this range, what's the problem? Momentum becomes a problem, right? Again, still an overall bullish, again, I say overall bullish. I'm a day trader, right? I'm not a long-term trader, right? I do understand the long-term trend is bearish right now. But for all of our short-term traders out there trading short-term momentum, that is a pretty strong momentum off the high. What we're going to do is now let those bears try once, let them try twice. Think about where are all of their stops and go stop hunting. That's all you're going to do in these situations, right? Make sure you know where those bears are. Let them try once, let them try twice, and we'll buy right into those stop losses. Try to go back up into that trading range. And then again, if we do get that rotation off that low, it's that same, 1, 2, 3 breakout. It's that same pop and grind breakout. It's that same pop, shallow pullback, higher high to try trap. It's that same breakout system, the same breakout sequence I mentioned here before. All right, guys, so that's how we want to be thinking about buying this NASDAQ as it goes higher or as it goes lower. Now, how do we sell it as it goes lower here? Right? How do we sell it back down to those lows? Let's talk about that. Right? Let's go to the S&P here next. The S&P again is quite similar here to the NASDAQ, but you'll see there's going to be a little bit of difference here on the E-mini S&P. 3 main components. We are definitely a little bit more bullish than bearish right now in the S&P, but I'll tell you, you'll quickly see tonight, we are not as bullish on the E-mini as we are on the NASDAQ. So to make it very simple right now, for example, the NASDAQ, you'll notice the NASDAQ over here, the NASDAQ made higher lows after that big bloodbath down. That higher low is a big deal because, again, it creates that rising support trend line. The NASDAQ was pretty much bullish, ever since the end of last week, right? On the S&P, you'll notice here real quickly, the S&P made a lower low. Right? S&P went lower and then made a lower low, right? That's a big deal. Okay, that to me, that confirms, okay, these bears they're not getting pushed over as much as we may have thought they were. So most important thing right now, again, overall, we are definitely more of a bear market into a trading range right now on this S&P, whereas the NASDAQ is more of a strong move down and a possible kind of slingshot, right, coming up off of that low here. Most important thing right now is, again, there's a lot of bullish rotation right now. We get a trading range underneath us, right? So range rotation off the low is a big deal. We go lower into that range. You'll notice what happens, right? We go below the range. We spit above the range. You can see for yourself, these are pretty, they're not exact. We don't need exact, but they're very similar, right? The amount below, the amount above, the amount above, the amount below. You can see the market here rotating back and forth. Now, look where we are now. We rotate off that low. We make that nice, well, not obviously a strong, not obviously a straight line up there, but now look where we are right now. We're right up around that same symmetry area right there. So again, we're bullish just as the NASDAQ, but we're sitting at some obvious range rotation resistance right now. Same thing on this range, right? So bullish into a new range. And again, today on the holiday session, we go lower and we rotate back higher. Once again, we are very bullish as we rotate off that low. But again, we're sitting at a major area of resistance. That's one very big clue. Another really big clue, and you'll notice the triangle that I have on this chart right now. This does not apply to the NASDAQ, right? The NASDAQ has a higher low here, but again, you'll notice the triangle. Now, why is the triangle an important clue? Well, because remember, markets love to rotate. So notice how the market rotates down, up, down, up, down, up, and look what happens. It never finishes that rotation back down again. Okay, that is not a very big, that's not a very good bear clue. That's a very bullish clue here right now. Now you could definitely argue that this simply took a little bit longer to get back to this high, and they're going to make that way back down to retest the low. I could definitely see that argument there. I could also see too adjusting this triangle a little bit tighter there as well, right? So you could definitely see there's a few different ways to argue this. In my eyes though, there's a big red flag there on that failed rotation. Something clearly affected that market and said, no, we're not ready to go any lower at this point here. The lack of bear follow through is in my eyes, a very big bullish clue here right now. You'll also, of course, see that it's the same basic idea as we had on the Nasdaq, right? We're at a very pivotal point here right now on this S&P because. And this is very similar to oil too. You'll notice we're right around, look at all that resistance right there. But look at all that wide open space. Look at that big drop that we had, right? Back to that, back to not last weekend. What was that? Fed, right? On Thursday or on Wednesday afternoon into Thursday and Friday. So we had that big sell on Thursday, after the FOMC announcement. That big move down, very little volume is traded there. There's a huge potential now for a nice big magnet or kind of a slingshot running back up here, taking out that 38.29. And again, that gap up there, right? You go back in time a little bit further here, and they still have that wide open gap. Now again, don't get too aggressive thinking, okay, the gap has been filled yet. We're not there yet, right? We still got to see if these buyers can actually get their act together here and break through this, what is a very pivotal, a very critical area here for really both sides of the market here right now. So big question right now is can the bears hold this? Or can the bulls go out here and when they break this thing down here? Now, we talked a lot about this already. I gave you guys 3 breakout patterns going higher here on the S&P. The 1, 2, 3 breakout, the pop and grind breakout, and the 2-try breakout. Definitely look for those on the S&P. I talked about a 2-try failure pattern coming off of that low. All of these are still going to be in play here right now. How are we going to sell this thing though? Off these highs and back down to retest that low. This is where we have to be careful. Again, I really don't like the idea of selling off this high right now just because of all that bullish momentum. What I do like the idea though is if we can make a reversal going lower, there'll be a little tiny sweet spot right in this area below this rising support trend line. This rising support trend line, which again is also on the Nasdaq, is really one of the biggest reasons why you would imagine buyers will be trying to buy that pullback here. We'll definitely be watching for that tomorrow. However, if we can slip and get underneath that trend line now, I would imagine, for example, one of my favorite trades we talked about earlier was that pop and grind. I would imagine a pop down and a grind down here will be one of the easiest giveaways for inevitable retest of that low. If we can get this thing to kind of come off this high, pop down, and grind down on this, that gives me a lot of confidence now to draw that trend line off that low, bring it up around that big high. And again, what I'm looking for on this is that trend line right there is probably going to be seen as one of the best options here for us to get that short going. One thing about these kind of breakout pullbacks you want to keep in mind here, and I wish I would have talked about this last week before we finished up the week last week. When it comes to using trend lines for a breakout pullback, what you need to kind of keep in mind is you need to get some sort of daylight in between that trend line and the candlesticks. So for example, if we have a trend line coming up like this, I am never looking for a breakout pullback like that. Right? Something that barely breaks below that trend line. What you want is, because what happens is this trend line can be drawn like that. It can be drawn, you know what I mean? You have to get into the habit of thinking of trend lines, especially trend lines, really every level, as kind of a range of prices. So what you want to do is get underneath that trend line with enough punch so that now as we pull back, we can now use it. In other words, we have to get the strength of this market, because anytime we see a strong move in one direction, we have to get some strength going lower in order for us to justify that short. Okay, so again, be very careful if it just simply slips underneath it and then instantly pulls back right there. These are very difficult to tell which one you can trust, because again, there'll be a trend line right there, trend line right here. You know what I mean? It's very difficult to get those nailed down. What I'll do is wait for it to really push and then look for those new channels off that low, and then look for the entry somewhere around prior highs, goes those traps, and try to use that trend line right on the opposite side of the as a level of resistance here instead of a level of support for the buy side here. One thing you do want to keep in mind though is if we end up back around these lows here and we start seeing 1, 2 and start creeping back into that trading range, again, we're looking for that long going back in. But I'm telling you right now, if we can get this thing to pop, get below that moving average and start to grind down here tomorrow, right? It'll have a very distinct personality to it. If we can get it start to pop and grind down, now we kind of have the idea now of where they want to go back and retest that low. We can draw off those lows up around that high. And again, I would love to use that trend line. That would kind of be the ideal, but it certainly is not necessary. Most of the time what will happen is we'll get back to the top of that channel. We'll be above the moving average. The buyers will come in. They'll try to buy that pullback. We can use all, and this is the key, we can use all of that momentum going lower. Anytime we see a strong move like that, they're going to want to retest that low. We can use that momentum as a way to sell off the high of that channel. And again, could be a trap of a prior swing, could be a failure above the moving average. And again, the goal here is to retest that low. Now, I could easily see this right now. I could easily see us coming out of a holiday. The bears come in, they run this thing pop and grind, going lower, or maybe it's a 1, 2, 3 with a real strong move down, right? 1, 2, 3 reversal, right? We find that low, we find that high, we get that short, whichever of the entry setups we see. Again, all the entry patterns, all the entry triggers we use in the trade room, you'll learn that stuff in that free trading course. But I can easily see this happening, go back, take out that low, and then from there now, all of these ranges now above us are still a magnet. And at that point now, we can now try to rope in some of these bears, right? Again, get the short off that high, take out that low, and then now buyers come over or bears come over. The bears try once, the bears try twice. It's that same 2-try failure off that low. We now know where stops are. Remember, there's a big, juicy range right back in the middle, and we can light those stops up like a Christmas tree here, running back up into that trading range. Right? Makes sense on that? So keep your eyes open on this if we do get a real strong move down, it's almost guaranteed to see a strong move down. We're going to see at least a retest of that low. Okay, it may not go forever, but it will probably definitely retest that low, and then 1 try, 2 try, after we take out those lows, get those weak hands selling into the low of that range, and then pull the string and rip this thing back up into that trading range. I really think that's the safest way, the most reliable way to be a seller here for tomorrow. You can try to pick off a crown reversal up here. The only thing I would think of here to sell short right now will be a crown reversal. It's a 1 try off the highs, it's a 2 try off the high, and of course a trap off that high. This would also apply to the Nasdaq as well. This again, I do not think is the best choice of trades going into the bullish situation that we're in right now. If this was more of a bear market into a trading range rather than this rotation off the low, I would love that trade. But remember, there's a big difference between a bear market. There's a very big difference to the bear market into a range that pops up. I can sell. I can sell those all day long, right? So bear market into a trading range, you can sell those all day long. That's a very easy trade. But there's a very big difference though between that setup and this one. If it goes sideways, goes lower, and then comes back up. See the difference there? That's a hell of a lot of momentum there for those buyers. And those types of setups, those types of moves, they love to bust and slingshot right through the opposite side of that range, right? So don't try to force that reversal off that high. It's very, very difficult with all that momentum slingshotting off that high. And that's pretty much where we are here right now on both of these E-minis. All right, got a pretty good plan of attack here. I like the breakouts. I like the pullback here to the buy side. I also like the long side off of that low. Again, it will be patience to wait for those bears try once, try twice, and buy off that low. But I also like that long side trade off that low as well. Not easy right now to find an easy short here. That may change though, right? So tomorrow morning, 8 o'clock Eastern time in our trade room, right? We'll do it all together. How about some crude oil? Wrapping things up here on the oil right now. Oil is bearish, thank goodness, right? Well, we'll see how long this thing stays bearish. There are three main components right now in this bear market into a trading range. The first one, again, we talked about that Fed gas tax waiver. There's a federal gas tax here in the United States that goes on top of any local and state gas taxes. A place like California, there's like dozens of taxes on top of the actual price of a gallon of gas. Long story short, if we hear even a rumor about this kind of vacation from the Fed gas tax this week, I would imagine the initial reaction will be bullish. But you can easily think of, let's not play checkers, let's play chess on this. I would imagine in reality, I would imagine if there is a federal vacation for the gas tax, I would imagine most people probably don't change any of their summer driving plans and probably just use that extra money in their pocket to offset other costs here. So you got to be careful with this, but be aware though, I would imagine the initial reaction, if we do hear something, will be very bullish because a lower price of oil will definitely bring up demand, especially as we go into one of the most important driving seasons of the year, the summer driving season. But again, be aware though, it may not be that simple. You may see a lot of analysts that slash their expectations on that because there's so many prices that are escalated out there right now. They may say, you know what, I'm gonna keep that discount in the bank right now. They may not say, oh well, good, let's plan that road trip to grandma's. Just be aware of that. It's on my radar, but it may not mean the full reversal. Oftentimes these don't have as much potency for more than a couple hours, right? So just be aware of that. But it's definitely something that could blow up in this market here this week. Next one, of course, is that bearish market in a trading range. Very bearish move here, right? This, of course, came after the Fed announcement last week as pretty much everybody hit the exits. It's a very bearish market into a trading range. And so whenever we have a bear market here into a trading range, we know we're trading rotation. The bears want to sell up around these highs. The buyers want to buy down around these lows. And we simply trade that rotation, or we trade breakouts, right? Buyers will have to break out to the highs. Sellers will want to break out those lows here. That trading range is a big magnet. And then, of course, just like the other two markets we talked about today, we have another major turning point right above us. And I'll tell you right now, this is you can see once again here, this is a very big week here for the bears and the bulls across all these markets here right now, because you'll see as we zoom out on this chart right now, look where we are. We're pretty much sitting just below that, beginning of the month of June low, right below 110. This basically is just one big trading range. So you have to think right now, if the bears, if they can't hold this thing, and this is what's kind of ironic about this whole situation, is that if they institute a vacation on the gas tax, you can almost imagine it will probably punch this thing back up into that trading range, and there'll be no net effect of bringing prices down, because as you can imagine, we get back in this range, where do you think they're going to go next? They're going to go back to 115, back to take out some of these prior highs. We unfortunately, we may have a situation here where they may crack up into this area here, right? The buyers may have an easy run back to 115, and you would imagine now the way that ranges work, if we were to slingshot underneath and go back up here, I mean, it's tough not to think that 120 could be happening, sometime into that 4th of July holiday weekend. And it's not difficult to think right now that having some sort of announcement about a federal gas tax break might actually spur the entire process, which is just like how it goes, right? They try to put rules into place, put legislation in place, and it backfires against them. Hence the reason why we're in this price mess to begin with. So we're at this very, very critical area, and I'm almost hoping for all of our gas tanks' sake here that Biden says no, we're not going to cut. Obviously I want to get lower prices, but as you can see, that may be a domino that may just trigger a huge, counterintuitive reaction here from these markets. Anyways, so that's a very big part of this. Now, the biggest challenge we have right now are these trend lines coming up off of this low. You'll notice right now on the oil, this trend line is going to be a bit of a problem as we go higher. Why? Because the bears, they want to sell off these highs up here and take it back into this range. The problem though is that trend line, along with this rotation off the low, is going to put a lot of pressure on those bears. I really like, again, like the rest of these markets, I like the breakouts going higher. It seems like the risk reward is a lot better for the long side on a breakout going higher here. I also think, much like on the Emini and Nasdaq, there are going to be buying opportunities off of that low. So buyers, of course, would love to buy the breakout going higher. Back to that potentially 115 later on this week. Buyers would love to buy the bounce off that range low. Sellers are definitely looking for shorts up around key areas of resistance, back down in, and they want breakouts. Right, going lower. 105 is a big target. And then, of course, from 105, we go all the way down to basically 101, 199 is that next level as we go. I would think if they can hold below 110, if we can successfully hold below 110 here, I would think 105 and possibly 100 are going to be in the cards here later on this summer. But that is a very big question mark. Again, this week is what an important week here for all three of these markets. We sit right around those major turning points. All right, how do we make some money in this market here for tomorrow? First things first here, as we go higher here right now, think about those breakout patterns, right? Think about that 1, 2, 3 breakout. I love that breakout. 1, 2, 3 breakout going higher, right? Buying that first pullback off that channel. That will probably be one of the easier types of entries to take. Again, I can't grab that first one. We can't grab the first one, right? Not when there's a range below us. We have to wait for that 1, 2, and then jump, and then we can use that momentum for the bulls to buy that first pullback, right? I also like that pop and grind. That's an easy one. Draw that trend line off that high, off of that low, right? Mark up those prior swings, get under a prior swing. If you can't get under a prior swing, get under the moving average, get those bears come in, try to short that thing. Remember, it's very strong at that point. Right? Anytime we see a strong move in one direction, we expect a retest where? Of that high. I like that failure, that trap, whichever one of the entry setups we get, right? You guys learn those in the free course. Or if it really punches, really strong move, right? Green, right? It really punches going higher in the pre-mark tonight. Opens up, strong move up, shallow pullback, higher high in price. Again, this one really has to pop, right? This one really has to pop. Okay, not up here, right? It's got to really pop, right? Real strong pop here because, again, a lot of resistance there up overhead here. Now, how do I sell it as we go higher? What are my two concerns? What are my two concerns up here? One is what? Momentum. Okay, momentum. Next one, support trend line. Okay, those are the two big concerns on that short, right? One of them is that rotation coming off of that low. The next one is that rising support. So we can deal with this. We have to make sure we use a 2-try trap. So as we go higher here, now the buyers come in, they're premature, right? The buyers are trying now, but again, they're premature though. We're at the resistance above the range, okay? We're not way up here yet. Right? So buyers really have no business in buying that pullback. It's not a bull market yet. It's a bear market into a range. We're at levels of resistance above that trading range. Once those buyers now try twice, we know exactly where their stops are. And our biggest challenge now will be to make sure that we're not selling too close to that trend line. So the easiest way to avoid selling too low, which is what happens in this example, is you have to go after a trap. Traps will be over above prior highs. Okay, that trap is where the money is going short on this. It's a very simple idea. It's 2 tries because of momentum. It's a trap because of that rising support. Now, we may also do something like this, where it runs up, right? The buyers go once, the buyers try twice. When that happens, that's another one, right? Same basic idea here, but again, think about now where a new channel might be off that low, off that high. Grab that trap right there. The trap is the most important part of this because, again, you're trying to sell as high as you can while avoiding that rising support trend line. Okay, not easy. Again, not easy. It's exactly why I said the S&P and the Nasdaq might not be the easiest ones because they're even more dramatically bullish as they rotate from way down below, right? So keep that on your radar as we go. As we go lower here, can I buy down here? Absolutely I can. What's my problem though? My problem once again, overhead trend line coming down. My problem once again is momentum. We're overall bearish right now. So how do you buy at the low of a range, which again is a great place to buy? You use the 2-try with a trap. Okay, that's the way you get in nice and low, and that's the way in which you trap in those bears who are trying foolishly to sell into a major low with a range above them. These are the weak hands down here. Okay, the pros are selling up here. Okay, they're not selling down here. These are the weak hands down here. Once those weak hands get caught, they're going to bail, and this thing will just snap right back up into that trading range. You want to be in down here rather than being in up here, right? Because again, that resistance trend line coming down. And then how about a breakout going lower? What would a breakout look like? Easy. 1, 2, 3 breakdown. Right? Remember, real strong pop out of that range. Mark that low, mark that high, get that short off that high. Right? That pop and that grind, pop and grind, one of the easiest ones. Mark that low, mark that high, get up off that low, find that trap, find that failure. Again, remember, first leg, third leg, think about 105, right? Where they love those $5 moves right now on oil. Keep your eyes open for those breakouts as we go lower. Again, though, range-bound market. Buy low, sell high, use those traps. And again, probably the easiest trade right now is the long side. But again, we're still very much a bear market here right now. We're going to wait for more evidence before we start buying here, especially as we go higher here right now. All right, guys. Boy, great job tonight. Great video lesson. Hope you guys enjoyed it. That was the fun part. Tomorrow, we get back to work in the trade room, 8 o'clock Eastern time. We've prepped our game plan tonight. Tomorrow morning, we trade that plan together in our trade room. Guys, if you're looking for a great place to learn and trade along, if you're making too many mental mistakes, if you're not getting the results that you want right now, what are you waiting for? Get in my trade room. Come do with me every day. It's a great place to learn and trade along. That way you're not missing the best trades each day, doing this all on your own. I'll put all the links you guys need. I'll put all the free course links to learn the strategy. I'll put the membership links. Come out and trade it with me every day. I'll put all that stuff for you guys tonight, below the video tonight on the website or in the description of the YouTube video. Don't be afraid to call the ops. I'm always here. I know I go pretty fast in these videos, but don't be afraid to call the ops. We can definitely slow things down. Make sure you have all the pieces you need put together, the computer, the software, the brokerage account, everything ready to go so you're ready to capitalize on. Be with me tomorrow morning in our trade room. Don't be afraid to call the ops. We got live chat as well, if you guys have questions there as well. All right, guys. Hope you all had a fantastic holiday. A very happy Father's Day out there. Happy Juneteenth. The first annual federal Juneteenth holiday. Hope you guys enjoyed the holiday. Back to work tomorrow. Hopefully, I'll see you tomorrow morning, though, of course. 8 o'clock Eastern time in our trade room. If not, you better come back and see us tomorrow night. We'll keep this party going here this week, this last full week of the month of June. That's it for me tonight, though, guys. My name is Joseph. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.